We are on video 2 of 3. So the Dow, technically I had a bearish setup on it based on a wolf wave on a certain time frame, and the Dow is at all-time highs. So we have that problem to deal with, right? So if they go above it this week with confidence and the market has a bullish week, the Dow is gone, just like the S&P. So I would stop out of the shorts. Last week I was lucky enough to sell some puts against the long put I have. So yeah, I'm red, but not as red as I could have because I made $60, I believe, in premium that I was able to sell 2 puts against the ones I was long. Determining whether it plays out or not, I will wait to see how this week unfolds. I may sell a put against my long put because my long put is out in time. I believe it's for 29th, so I can sell shorter dated puts. So I may choose to sell the 15th against it if I have enough premium. I'll wait for the first couple of days and see what happens. Okay, so that's the Dow. Technically, it's at breakout, so pretty tough to argue with that. All right, Disney, we kind of nailed this stock, and I told you to ignore what you see on Instagram. And this came to fruition, this white thing here, because it was set here, so it came 2/3 of it, so it didn't get to here. Well, that's all fine and dandy, but guess what, folks? Now they're back up into a prior failing zone. So if you ask me here, I would think it's not going to be able to break through here. It will need the help of the market, and if it does break through here, there are more sellers above. So I do like this company. I think they have great assets, and there's a danger of doing this. Okay? So I just want you to know that this curl could end up being like the other one. So I'm going to put it here. I'm going to put it in a different color as well. Put it in red. It's a cautionary curl. You should know, the way I would say, be aware. Just be aware. So if I'm starting longs here, they do have triggers here, but all of this whole area is sellers resistance. So buying zone below. Good company. There's nothing wrong with it. They're sold out. Just look at their P&L. It's whoa, incredibly impressive. All right, Devon, not an obvious entry point. I'm really worried about oil. It turns out, which I didn't know because I don't follow much news, the U.S. is pumping at record levels, more than Russia and Saudi Arabia. So I had no idea. We switched on that one. The White House pivoted on its commitment to less oil or whatever, and now we're pumping more oil. 44.50 to 45. I think it's going to be very difficult to break through. 45.20 also. If by some miracle, in order to get some relief, you need to be above 46. 46. That's technical relief. If you lose 43, you're probably going to 41.50 or 41. If you lose this candle right there, you're going to go to here. Until then, everything is a selling zone above. That red line is a huge volume area. A lot of transactors there. So resistance. All right, so what is this? Ecopetrol. I don't know what that is. All right, you have support below through 12.20 and 12.30 and 12.40, and a trigger above. If you go above 13 with one last hiccup, you can probably get 70 cents out of it. N-phase, I'm not trading that anymore. If I did, this would be an exit point, but they are buying dips. So if you just bought the dip, I think you did okay, technically. You're going into a round number, 100. You're going into huge volume support, that red line. I didn't draw that red line. And you could curl back up, and if you take 112 out, it'll be at 130 in no time. And that's the kind of stock that can do something like that. Or you can say they're selling rallies. One rally sold, one rally sold. This rally might be sold. And if they do drag it down and lose 72, this company will finish my era of 52. What? Get the fudge out of here. Hey, why not? There are a lot of sellers at 120, as there are a lot of buyers. There are more sellers at 120 than buyers at 84. So I don't know. Good company, good product, etc. I'm done trading it, by the way, because there are some factors of it that I haven't nailed. Even though I made money with it, it was too much of a pain. All right, look how volatile this ET is, energy transfer. Rally sold, rally sold, rally sold, rally sold. The next rally it will be sold. So you have sellers at 1375, buyers at 1290, and you're right in the middle. Trade that zone. Etsy, bearish setup technically. We liked it on the way down. There was no, I mean, we traded it several times. It was a pain once, maybe twice. I don't remember losing. Maybe I did. Oh, yeah. I remember. You guys did better than me. I got stuck in a weird credit put spread, but I ended up making money in the end. Anybody that rolled the credit put spread didn't need to, but they ended up making money. So yeah, it was a pain in the you know what. So maybe I'll consider going long on another dip into 72. I think it's going to 72 next. If you take out 85, you go into 95. What? Commit. I don't know. Look at the P&L. It's not that great anymore. Look at it, right? The gig economy is dying. It looks like people are going back to normal work. But you can't deny the technicals. So if we dip and this holds up at 76 and it curls back up and takes out 85, $10, $20 could be the upside potential. Kind of like that green thing right there. But not an obvious entry point up here. I think I would buy dips instead of chasing rips up here. GE. So last week it did something. First of all, 118 was a huge breakout. And then last week it kind of bounced off of it. And so now here's the battle for GE. 122.5 versus 118, that low, that little wick. So this wick up here and this wick down here. If you lose 118, you go to 115. Technical move. And if you do what BA has been doing, you should be able to take out 122.5. The first test of GE is at 121.5. Somewhere inside these two candles. I think there are some, let me see, let me zoom in, maybe I'll see it. Yeah, this and that area right there, this. So 121 and 121.5 right there. So let's see what happens there. Oh, is it? Wow. Somebody's saying that a lot of stuff on Etsy is actually crap from Temu. Oh, wow. If that's the case, they're doomed. I don't know. Verify. Okay, who is this? GM. Oof. This white thing is coming to fruition. Why? Okay, so stock ABC fell from point A to point B, spent months and months and months going sideways in a really, really wide zone, and it lost the zone, and now they want to gap up into it. I don't buy it. So let's see them get to 38. If not, there could be a gap fill, and that's pretty close to losing 26. If GM loses 26, that's a big if. That is a big if. If it loses 26, GM will be in the teens. That's what I'm saying. But that's probably months away. Right now, the bulls need to break out of 36 to 38. Good bounce, but probably too big. They're going to have to change their mind. I'm just waiting for these car makers to say, well, it's not going to be EVs. It's going to be something else, some hybrid of sorts. Okay, 140 or higher would be good relief on Google. Good company. It alerted me this week in the last 10 days to sell a put spread on this dip. It got to levels that I thought were pivotal, and sure enough, we bounced right off of them. But it's still lagging. It's kind of like Amazon. Great company. It's an ATM, but it's not doing as well as, say, Microsoft. So if Google breaks out of 139, that's a big if, and I'll tell you why in a minute. It's gone upwards. So last week, Google did something I've never seen it do. Rally 7%, almost 7%, without an earnings report. I've never seen Google do that. I don't remember ever a time where it did that. So it was chasing an AI headline. Now, the AI video they showed is super impressive, but it's still the same thing. AI making them money, which is a headline they rallied on last May. So anyway, what I'm saying is that headline was BS. Okay, it was a reminder that, hey, they can make money with it. But that headline, that's the second or third pop on it. NVIDIA started it in May. So I wouldn't go long into 140, but I would chase the breakout from 140. So if you bought that dip on Friday, okay. So if you're buying it into 132, 131, 130 for the curl and bust out, I get it. If you lose 128, you're going to 121. And I'm going to move this. Actually, I'm going to add another alert down here because I would go long down there. Again, actually, you can do it here too. Here you need to pay attention. If it falls into 128, it's a battle. Goldman, another stock I will not trade in a long time. So went long and then added credit call spread, and I wrote about getting out of it because I had a feeling they were going to do this, and look, they're doing that. The credit call spread was at 350, and it's trading like they found new ways to make money. I think people are happy that they decided to exit from the retail sector, so maybe they're chasing that. If I'm short, I would bail early, so to take a small loss or give back my gains as opposed to being stuck in it. Don't be stubborn. The market can do some pretty crazy, stupid stuff, and then in the end, you'll regret it. The least you can do if you want to continue to be short is roll. Roll it out in time and fight with it. Live another day. Live to fight another day with Goldman. Good company, good management, proven over time, so don't fight them. Plus, they cheat, so you can't. All right, Hubs. Rally sold, rally sold, rally sold. So Hubs, if they don't go above 420, if they go 520, 519, 520, they probably will go to 570, 580. And that'll be another set of battles up there. So if you bought the dip, you're doing right. So if they don't go above 519, 520, they could drift back down to 470, 460. And that would be another reason to get long. Anywhere inside this zone below 460, is attractive into a whole bunch of buyers down here. It looks like they love it anywhere closer. The closer you get to 430, 420, the more they love it. If for some weird reason they end up losing 400, whoops. But I don't think it does it alone without a major headline. If the market's correct, maybe it's in danger. But for me, it's a buy the dip into this cluster of buyers. Or chase the rip. IBM, wow, I don't get this company. I honestly don't get this company. Kudos to whoever convinced the world that this company does well. This breakout is pretty good. It's on a weekly basis. It's going into prior fails. So it is a breakout. So you can't short it. But if I'm chasing it for an investment, I better study the outcome. Like, why is this exciting? Look at the sales. I'm not ragging on a company because I don't like it. Just if I told you here's a company that's been shrinking sales for like 20 years, would you get excited about it? No. Look at it. The bottom line is shrinking. The top line is shrinking. On a quarterly basis is going. It's not cyclical because that's 5 of them. So, like this one was 4 quarters ago. This one smaller than 4 quarters ago. This one 5 quarters ago. This one is its comp maybe a little bit higher. So where is this excitement on this company? But it's a good trading stock. So it's a weekly breakout. I wouldn't short it, but I definitely would not get engaged with it on the long side. Buy the dip into 152, maybe, as a trade. Buy the next dip, like this one. Maybe they're in an ascending channel that you can trade, like from here to here, higher lows and higher highs. Wouldn't invest in it. I would definitely trade it, though. ISRG, I will buy the next dip. It has a lot of support below. This is a pretty heavy contention area. I do have alerts. If they take out 322, I think they get to 360, if not more. Okay, it's like the S&P. It has an inverse head and shoulders of upside of about 40 to 60 points. Yes, you heard that correctly. So that's why I'm saying the S&P this week has an epic move potentially. I don't think it should happen this week, but it can. The IWM should be a short here. It should be easier. It should be easier to get to 181 and 180 than it is to 194. So the next $5 should be down, not up. And the rally has been phenomenal. This is a basket of 2,000 stocks that just rallied 15%. Put things into perspective, 15% is half the correction from COVID highs. So that's a pretty good rally. And we're not even close to breaking out. Where the S&P is almost there, the Dow is there, Microsoft is there, blah, blah, blah. These guys are not even, they've just recovered the upper end of the year-long consolidation zone. Not even in the upper half quadrant of it. Okay, so this is the upper end of that consolidation zone. And they're just approaching. So I wouldn't short it just because of that. But I think it's easier to dip. So let's see what happens. I would be a buyer of that dip into 179 if I'm trading the IWM. JP, just like Goldman, only a little bit less aggressive. Goldman looks a little bit more. But this one is easier to short with an immediate stop. So if somebody wants to buy a debit put spread or a put, and they want to stop out immediately, because this also looks like a cup and handle of sorts, like the S&P, that if they take that out, 160, they go wherever they want. At least $12. So 172 is doable, which would be the other trigger. This P&L, look at it. Beautiful. Yeah. Beautiful, pristine P&L. Regardless of whether somebody went to jail. I think they had like 3 or 4 people go to jail this year. Shh, don't tell anyone. All right, what the hell is going on with Lilly? I don't trade Lilly. I don't think you should either. Look at it. Look at this volume profile. What a freaking mess. Okay? You have to study the company. That's all I'm saying. It's almost like NVDA. There's some things that I don't understand about it, and I don't want to understand about it. I just stay away from it. Look at this. Whoa. So you need to study the company. What is it? There's like gaps in volume that are massive, like this area. It's not just the gap on the chart. Look at the size of the volume gap on the left side. And the bottom line keeps getting worse and worse. So study the company. Don't think you know the company from before. It may have changed drastically. Lockheed Martin, they couldn't be more neutral right now. Look at it. This is the place where it has had the most volume looking back a whole year. Looking back multiple years. So nothing to do. If you go above 459, you can probably get to 475. Meanwhile, you have buyers scattered all the way down through 415. I don't know what to tell you. You got, look at it. Buyers and sellers. So maybe a sold strangle, maybe, or an iron condor. I don't trade that company. Headline. I try to avoid headline companies. Who is this? Lattice. So I'm not sure why the price of a semiconductor is doing this when its P&L is looking okay. In a time where semiconductors, I mean, we're going to need more and more machines to do all this AI stuff. What the hell does Lattice do? Designs, develops, markets, programmable, oh, okay, PLSI, whatever they're called. I have no explanation other than to say this was a place to get long into Lattice against this. And you have sellers at 66 plus or minus $2. So I wouldn't get long into here, although it is tradable. So from a trading perspective, if they go to 63, they probably can get to 68, and I would exit there. Or buy the dip for now. Buy the dip into 60 or 59. You have buyers. Las Vegas Sands. I stopped trading those because of these headlines of labor and hacking or whatever. So if you lose 44, you're probably going to get to 37. We traded it and we did well. I wouldn't trade it again. This is the downside scenarios. Mine is down here. These two are the quote official arrows. And I think I have sellers into 48. So be careful. You have sellers into 47.50 and higher. Meta. Meta is going to go by way of the SPY. So if the SPY goes higher, this one goes higher. It's weird to trade, so I wouldn't short it because it has gaps, because this is a new world for Facebook. I happen to think there's a lot of fraud on the platform. That's probably not a shocker to anyone. Like if you buy something from Instagram, for example, I bought maybe 3 or 4 things, all shams. All of them. Not one thing was what it was represented to be. Like, not even close. So, I don't know how long they can continue that. But, anyway, from a earnings perspective, its future is unknown because they're switching over to a platform that is not there yet. So you can't short this. And that's what makes it not shortable. Why? Because you can't short an idea, especially when the company has 3 billion or however many active daily or monthly users. You can't short it. So what do? You end up buying dips. All right, let's look into dips. You have support through 318, 17, 16, 15, 14. If it gets to 305, I would get long. Okay. Anywhere below 312 is interesting, even though it would have triggered a 295, but it would be an interesting place. Anything above 342, it's gone. Okay, smoking. Is that good for you, by the way? No, it isn't. So quit smoking, please. Thank you very much. Rallies sold, rally sold, rally sold, rallies being sold. They do have buyers below 40.50 and 39.50 and 39. You lose 39, you get to my arrow. I think they get to my arrow. Unless this is the last one. So how do we know? If they take out 43, ta-da, they may have taken a step to finally breaking this descending trend. So take out 43, Mo. Take out 43. Otherwise, you're probably going to bleed lower over the next month or two. MRVL or MRVL, good company on P&L. P&L is pretty solid looking, not bad. And I think it's buyable anywhere below 51, anywhere below 48 for sure. And I would go long it if it follows this red path. This red path is like a copy paste from another area. So let's go zoom out a little bit to see where we're at. It's a pretty violent chart. Strong base below 45. I say that with complete confidence. So dips into 46 are buyable for me. That's all there is to it. If you break out from 58, you can get to 66, but as an investor, you can nibble for the long term. Microsoft, as an investor, I would not nibble for the long term. If I'm a trader that's savvy by selling calls and puts and all of that, yes, you can do it. The company is fantastic. The company is in a technical breakout that should get you that arrow over time. So are you a trader or an investor? If your horizon is 10 years, I wouldn't get in here. If you can't wait, I would sell puts until I get assigned shares. Or do a synthetic long, at least build yourself a buffer. Anyway, those are my 2 cents. Great company. Look at the P&L. Oh, wow. All right, so don't short it. Micron, you can short that one. No, you can't. But look at this P&L, okay? So let's look at this P&L. Microsoft, look at this beautiful P&L. Let's look at this P&L. I don't get it. Can someone please explain to me how the stock is still holding up when the company revenue is cut 40% or whatever the hell it is? The revenue now is like a fraction of what it was before. Maybe it's a COVID pull forward sales. Nevertheless, it's puzzling to me. 71.70 looks like a buyer zone. Anything below it is extremely bullish from a buyer's perspective. So if it dips down below 70, I think you would get long. Look at all the buyers. Higher lows, higher highs. So just follow the trend of higher lows, higher highs. The spirit of the behavior is they're buying dips inside of an ascending channel until they hit a wall. The wall is probably into 84, 86. So dip, you buy, and you enjoy a little rally back up. Netflix. Pretty wacky chart. Higher lows, higher highs for sure, but the problem is that the range is widening, so the mistakes are bigger if you don't nail it. Okay, so let's get into it. 465 to 472, exit. Until you get above 474, 5. If you can beat this candle, you can beat these candles. So you have sellers into 474. Above 474, I think the sellers are out of luck. Meanwhile, it's easy to lose 445, and if you do, you will get to 425. That's my take. What am I saying? Let me see if I have any lines. Oh, okay. So the lines say buy the dip, right? Inside that buy the dip comment, I think that this line here needs to hold, and if it doesn't hold, they might do this. So there's an opportunity for bears right there. Until then, everything up here is a seller zone. This was a trade we discussed in the live room, so that's not a trade for you now. On some day, I can't remember, middle of the week, sometime this past week. So don't take it now. The premiums are probably not there. Now, ServiceNow. Yeah, no, not now, not now, not now, not for me. Why not? Okay, let's just ask those people up there, how did they love buying it last time? Great price action, great breakout, probably more upside, 760, 780. Again, I'll say that if you're a momentum trader and you think you can get in and get out, go for it. They're buying dips into 685. I'm not that fast, nor am I that courageous. There are plenty of other stocks like we saw that I can trade on the long side. I wouldn't short it. It's in a breakout. And you, not in a breakout, stuck in a zone. You have sellers at 8.4, buyers at 8.05. Ping pong until one of those edges breaks. NVDA, changing the game. 448 will bring you 424. How? I think there is a potential dip here. If you lose 448 or 449, I should say, this is a potential buyable dip or tradable dip. And of course, it's in a breakout mode. What do I mean? They are trying to establish rally. They're trying to establish a buy the dip. Buy the dip. So if they take out 509, that area up here, they're gone. Like 550 or whatever. And this is the kind of stock that can do it. So I wouldn't short because Nick put a red arrow. I'm telling you that the opportunity for the bears is here. So if you want to short against the 488, that is a trade. You can say, I'm short, however, debit puts, credit call spread, buy a put, diagonal, whatever, and say if it goes above 488, I might want to get out because the sellers have lost an edge and it's probably going to beat that 510. Okay? So if I'm an investor, I wouldn't go all in here. I most definitely wouldn't even, actually, I personally wouldn't even start, but it is what it is. All right, so this is the end of the second video. Let's stop that.